Welcome back, everybody, to another episode of Fintech Fridays. I'm Brian Vieaux, President, Chief Operating Officer at FinLocker. Joining me today is Steve Sigaty with Lender Toolkit. Steve, welcome to my little podcast.
Brian, thanks for having me on. As I told you on the way in, this is my first podcast, man. So, thank you for the opportunity.
No, I'm looking forward to it. Just for the audience sake, we're probably not going to get into any kind of drum solos this time around. That'll be kind of our second episode that we record together.
I like that. Just for the audience to understand, I like the impromptu drum solo. You know what I'm saying? Not the pre-planned. So it's better at like midnight at Kid Rock's bar in Nashville than it is at like 12 p.m. on a podcast.
Understandable, and I'm the same with my my harmonica. So that's perfect. So. Nice. Steve, you and I have known each other in and around this business for a bit, and I've come to learn a little bit more lately about the Lender Toolkit, and thought it would be perfect to have you kind of come on as we kind of are starting to move into the conference season. I want our audience to understand who the Lender Toolkit is, what you guys do and what you're doing for your clients. And then obviously as we get into that fall conference season, folks should be looking you up to get on the calendar with you. So let's start before we talk about the Lender Toolkit. Let's just kind of have you share your background, kind of what you've been doing in the industry, where you started, and then how you got to Toolkit.
Awesome. Appreciate the opportunity. So it is a funny story. The way I ended up in mortgage is in inside sales and starting with Portellus, which was a well-known rules engine automated underwriting system back in 2005, kind of competing with Mindbox and Commerce Velocity, and really kind of took to the mortgage industry quickly because once you go to one conference, you realize all these people know each other, right? So you better not burn a bridge. There's a ton of opportunity if you can stay in it. And so I moved to a Commerce Velocity and sold, again, rules engines, loan origination systems, and then worked at a place called Genpact for a while. So just helping people understand my background. I've never been an LO. I've never done a loan, but I have sold loan origination systems, point of sale systems, QC outsourcing. I went to LoanLogix for 4 years, worked with Wooly, one of your buddies, and then went to Sales Boomerang, which was kind of a real game changer for me in terms of, I think, highlighting some of my skill set as being able to just go out and find opportunities and be a face of the company, besides Alex, obviously. And then recently moved over here to Lender Toolkit because I really saw an opportunity with what's going on in the industry and the technology they have, and to kind of just put that plug out there. Their biggest challenge is nobody knew who they were besides the little plug-in company for Encompass.
So I love how you highlighted your background and your lack of kind of, we'll call it, formal mortgage experience. That's the first time I've learned that. And so you've, for somebody that hasn't originated a loan, didn't kind of grow up and live inside of a mortgage, operation per se, you fake it pretty well. You definitely come across as somebody that really understands the business, and that's a credit to you and the companies I think that you've represented and how they're viewed in the ecosystem. So congrats on that.
Yeah, I appreciate it. I'll tell you, it's a shout out to Amesh Verma, who was CEO at Commerce Velocity. I was inside sales. He saw potential, I believe, and at one point would allow me to sit in meetings with executives from Bear Stearns and other big Wall Street firms where I didn't say anything, but I got to listen to what is the challenge they're talking about? How did we respond to that? Where was there friction if there's an existing relationship and frustration with maybe, what we said we can do, that type of thing. And that, I think, is the type of opportunity that the only way you get that is somebody sees potential in you, right? And then puts you in that position. And so it again, absolutely. And then I'll bring up one more. Jeff Walton, who everybody knows in the industry, years ago, I was talking about something and I said, I've never originated a loan, but I don't think I need to, right? What you need me to understand is what is the challenge, and can I clearly relay to you how we can solve that challenge? That it doesn't matter if I've done a loan, right? So it does bring you trust faster if you can roll out, oh yeah, I was at WAMU. Oh, so was I. I wasn't
Right.
at WAMU, right? But boy, I've worked with a lot of those places, and I'm getting older, right? So I'm coming full circle. Look at yourself. Like I remember trying to go after you for business at Flagstar
Yeah.
years ago, and now we're at a point where we're like, hey, can we partner on something? So that piece never gets old to me, where it's like, hey, and I just met a guy who we worked with at Commerce Velocity, who's now at a customer we just signed. Haven't talked to him
I
since
love it.
2010, but it's like, oh yeah, I
Yeah.
remember you. So that piece, I love it. I don't know if it's in other industries.
I wouldn't know because I've only ever been in mortgage since 1991. But talking to people that friends and folks that I know that are outside of our industry, it does seem that there's definitely a uniqueness about mortgage and how, while it's a big industry, it's really not that big when you think about who the players are. And I've seen you in action at many different conferences, and you definitely work the events um, in a pretty impressive manner, and no lack of overtime either, if you know what I'm saying.
Yeah, I appreciate that. You know what? It's I honestly believe just the word hustle. So this guy one time he said, "Oh, you sound like a hustler," and I thought of it as like a negative term. I'm like, no, I'm a hard worker. And he goes, "That's what I mean.
Right.
You go out and you
Yeah.
just hustle business." And that now I really love that term, and I've got a group of people I respect that I almost see at every conference, like a John Hill, right, David Quada, some of these people, and I would refer to them as hustlers, right? They're people
Yeah.
that they don't. There's no excuse. So, oh, you don't get leads from your company? Don't care. Don't need them. I'll go figure out how to do it. And I think you either have that or you don't, right? And
That's right.
yeah, and so for me, coming from inside sales, going to outside is like, oh, this is awesome because I used to just hand everything off to someone like, I hope they close it. Now it's like, no, I
Right.
just keep it and run with it type of thing.
Yeah, that's awesome. Well, let's shift gears and talk about the Lender Toolkit. Kind of how the company got started, and then I want to get into some of the cool products and services that you all are offering in the industry. So, how long has the business been around, and what's the story behind this company?
Yeah, it's a great story. It's an evolution story. So, company's been around about 8 years. Started as Encompass experts, so really coming in and really helping people either unwind challenges that exist with old rules, or building new customizations and improving things, integrations, and did that for quite a while. And then at a certain point, purchased what we call our power tools. And the power tools, we have 42 different plugins. We call them power tools. They do simple things like USPS lookup, real complex things like business rule analyzing, things of that nature. So a lot of power typically targeted to an Encompass admin so that they can
Yep.
do things faster, better, save time, that kind of thing. And that really, this business, that's what they're known for. So about 2 years ago, a little over 2 years ago, they acquired technology that really is what we call our mass platform, mortgage automation as a service. And you're talking about everything from income calculation, disclosure automation, AI underwriting. I'll break this stuff down in a second. Post close automation, investor delivery. But these are not plugins, right? This could be 60. This could be a 90-day implementation.
Yeah.
And the goal is automation, right? How do I get rid of the tasks that people don't need to do anymore so they can focus on areas where they have to think, and you need that critical thinking. And in turn, I don't need as many resources, right, to grow my volume, and I can bring my costs down, right?
Yeah.
Because that's a never-ending chase in mortgage that we've seen, and so that was done about 2 years ago. When I came in here in January, the reason I came here was, again, one sales guy, Brent Emler, a guy I really, really respect, and he had done an amazing job, but he's one person, and
Yeah.
their challenge is everyone knows him as the plugin team. So what I'm good at, as you just said, is let's just go get everybody to understand what we're doing. We're not a fit for everyone, but those that we are, let's go. We've got some good stuff. So that's really been the focus. We only work with folks that are on Encompass today. That may change in the
That's what
future,
I
but
was gonna ask that question. Okay.
yeah, it's like the easiest qualifier as a sales guy, right? Hey, are you on
Yeah.
Encompass? No, we'll be friends. We'll chat. Yeah, but I can't
Right.
help you. So yeah, it's the intriguing piece is AI underwriting. To me, is like the point of sale system a few years ago. In other words, it's a sexy term.
Yeah.
Everybody has a different idea of what that means, but they all know it's going to save the world and change mortgage forever. But when you get under the hood, your underwriter could do 50 loans per person per day. But the challenge we're finding is not just productivity of an underwriter. It really is looking at the process where an application comes in, and now an LO typically is like, here's a list of things I think you're going to need to give me, right? They're not product specific. Just go get them, throw them to me, right? Those documents start coming in. Most of the time they got a LOA or a processor. They look, I'm not sure. Let me throw that to underwriting. Anytime you throw it to underwriting, it's typically a 24, 48-hour turnaround time before you get a response back, right? And this is in a lower volume time frame. Now add in third party. Here comes the appraisal. Here comes credit data. Here comes DULP. It doesn't matter what it is. Again, I'm either like, I think so, or I'm like, let's get underwriter eyes on it. So where we're really focused is, what if I could bring underwriting up like a virtual underwriter? It's sitting right on your LO shoulder, right? So when I talk to a borrower now, I pull credit, I pull DU, for example, I run AI underwriter. It's basically going to give me product specific conditions to the borrower right then and there, no delay. And as they start to bring things in, income calculation, hey, I use the same tool that my underwriter uses. So we're starting to create transparency, starting to be able to set expectations different. That piece seems to be the game changer that everyone's kind of starting to, depending on the institution, go, yeah, I need to have transparency right now. I need to have trust from a borrower, because it's going to get me return business. It's going to get me referral business. And take it one step further, your real estate agent referral partners, they want to know when the loan is closing, is my borrower approved, and how do we get this deal done?
So if we dissect this a little bit, so I understand the Encompass correlation. How does that particular tool interact with point of sale, or doesn't it?
Yeah, so great question. So let's take the different channels. Let's take retail today.
Yeah.
So if you talk about retail, typically we're not integrated for AI underwriter and for our income calculation to the point of sale. We are a tool that the LO, if you want to, can have access to and would work with. And again, conditions from AI underwriter, now those can pass to the point of sale. So like Simple Nexus or Blend, because they're integrated to Encompass. If they can get to the conditions, they can push those out to the borrower.
I got it. So one of our mutual relationships is Synergy One Lending. And I know they're, Steve Majerus and the team there are major fans of AI Underwriter. I can't recall what they branded the product, but they have their own internal
Clarity.
branding.
They call it Clarity.
Clarity, right. I love that. So for using, Synergy One and their loan officers as an example, I believe this is the case. At least I sat in a meeting once and heard Steve and Nicole kind of talk about this, is every loan starts by getting run through Clarity. So at the very earliest part of the process, once a initial application is taken, it's hitting Clarity right out of the gate before the needs list is going to the consumer. Is that kind of a best practice for how to use that tool in the most optimized manner?
Yeah, that's a best practice. And I'll tell you what, it wasn't how they started.
Right.
No customer has started by rolling out AI underwriter and immediately giving it to an LO. And the reason why, and this is across the industry, when AI underwriting solutions are introduced to underwriters, the answer, the feeling is skepticism, doubt. I don't trust it. Why should I? Right?
Yeah.
So the key to this working is getting the underwriter's trust. The difference between our solution and many of the others out there is we're not what people might refer to as a black box solution. In other words, data goes in, responses come out. You customize the conditions. You get what you get. So an underwriter a lot of times is like, well, I don't know what's been done. I don't know what's left to do. So I think I'm just going to re-underwrite the entire loan, right? So difference in how we do that is you can customize conditions. You can customize a lot of things. And we work to gain the underwriter's trust. Then you move this out to processing and out to your LOs. But to give Majerus credit, he already had the vision, and he came back to our company and said to our CEO, he said, I can do same day approvals with your technology right now today. And we're like, no one's doing that with it right now. And he goes, let me show you how, right? So we walk through the different steps, obviously dependent on the borrower opting in to give you a certain amount of data up front. We all know that. But it was a game changer in terms of us understanding the power of our tool beyond a standard operational sale, which is I can make your underwriter do more loans per person per day, right? Which is
Right.
great, but we need more, right? And so the way he explained it to me is he literally was calling up his branches and saying, "Are you using AI underwriter?" And they're like, "What's that?" Or, "Oh, maybe I heard about it." And he's like, "No,
Yeah.
you need to use that now." But he explained to him, and he said it took 20 minutes each call. And he explained the benefits, what it can do for him, basically increasing one-touch underwrites,
Yep.
sometimes bypassing processing altogether. And every one of those branches said, "We're changing our workflow." And that's the key, is that you're not getting this if you're going to keep doing what you're doing.
Yeah.
You have to change, like you said, instead of giving a needs list, I got to run AI underwriter. But here's why you do that. So they're all doing that. And as you said, we're seeing that adoption grow and grow and grow. So now when we go out for new sales, we're talking about how we can give you productivity, but also, do you see this vision? If you do, we've got the playbook to start rolling this out as well.
Yeah, I think you hit on this in the when you first were describing it. It's as much about productivity and efficiency and cost saving as it is meeting the expectations of not just the current mortgage borrower, but the next generation home buyer, right? And part of the frustration that home buyers have had for decades in mortgage is there's this I've always heard people talk about the Columbo approach, right? Just one more question, ma'am. I have one more question. And what you all are able to do is give access to that technology, through the integration, push it as far up the channel, up the funnel as possible, so that the first time the consumer is engaging with the brand, Synergy One, the loan officer, they're getting before anyone's doing any analysis, they're going to get immediate feedback on what's been put in. And then you have this very custom set. It's almost like a paint by numbers approach to complete this package, right? And I think most younger consumers, they want confidence, right? And there's no better way to give them confidence to be able, in the same day they apply, give them a very solid, real underwriting approval that Majerus and the Synergy One folks are doing.
Yeah.
Uh,
Yeah, I think,
Go
and I
ahead.
think, oh, sorry, I'll just add to that is you just nailed it. It's the expectations have changed. We all know there's a million articles about it, how mortgage is trying to catch up. But I think
Yeah.
sometimes we chase the shiny object, right? So the shiny object that I see out there is, hey, where's that robot that I plug in and I can let go of, all these expensive resources and it just does everything perfect. It
Yeah.
doesn't exist, right? It doesn't exist. The AI that people are fearful of at banks because they're like, oh, I can't have something just making decisions without my approval. That still has to be worked through. There's still tests going on, whether it's going to have prejudices or whatever things
Yeah.
that we don't even know. So my thing is, where do you want to go now? What's the best you can do today? And I can show you how to do that today and what we talked about. So if you want a majority of your loans to be 7 days clear to close from application, then I've got technology that can do that, right? But is it all robotic, all automated? No, there's human
No.
beings involved in it, and that's part of the power, right? And
Yeah.
so that's the piece that I think people get caught up in. The analogy I thought of the other day was you could have the most efficient kitchen making the best food, right? But at a certain point, a line starts to form because there's too
Yeah.
many people, right? So best kitchen ever. Oh, they make more food than anyone else. That's great. But I walk up and it's already 9 deep in the line. And I'm like, maybe I can order off an app. And you're like, we don't have that. And then I look
Right.
over somewhere else and it's like, order off the app and it'll be ready when you get here. And I'm like, I think I want to do that, right? We're,
Yeah.
we're, we're in that phase right now where you want to keep making yourself more and more efficient, but you've got to keep improving the experience for the borrower. Because the first one that does, like think about Synergy One. Somebody comes in there and goes, yeah, I talked to him on Tuesday. Dude, we're closing next Thursday.
Yeah.
Who would you get that from? Oh, Synergy One. Okay, I'm going to go talk to them, right? Or I'm bitching to my realtor. I'm like, dude, this guy you recommended, he takes so long. He can't even tell me if I'm approved. Oh, the realtor's like, you got to go try Steve, right? Because he's helped 3 of my other clients. They got approved. It took like 3 days. They closed in 10.
Yeah.
That's the thing I think. And the last piece on this, that it's not a fear, it's an education. You don't buy these products, drop them in on Monday, and you see all the results on,
Right.
Friday or a month out, there is a trust and a training and an adoption that has to take place. So if you want this in place in December, you better go back 60 to 90 days and be implementing there. Otherwise, your expectations are going to be, offset.
Yeah, and I think there's another. I don't know this for a fact, so I'm going to go out on a limb, and I'm actually not going on the limb. I'm going to put you on the limb. But my sense, based on what you're describing and what I've learned, in the last month or so about the product, is this is not just about the underwrite, the point in the transaction where a credit decision gets made. This really extends all the way through loan delivery. It's really a quality issue because the more clarity that's provided earlier in the process to the consumer, and then and they can then provide data or a document or documentation that satisfies that particular condition, is going to lead to a less quality leakage on the back end when we get into post-close QC and investor QC and all those things. Is that another element that you guys focus on, is kind of the quality through the ecosystem as well?
Yeah, so thanks for bringing that up, because so when we go back to what I called our MaaS, right, our mortgage automation as a service, then you're really talking about automating the mortgage manufacturing process. So you can take income calculation and AI underwriting and the power we already talked about. But what about disclosure automation, right? Can we enable an LO to compliantly disclose 24/7? The answer is yes. So we have that technology. Again, this is cutting down on cures on the back end. This is cutting
Yeah.
down on any type of delays, challenges people are experiencing today when they have to rely on a desk for every single loan, can't do it on the weekends, whatever that might be. Then, as you said, if you move into just closing, we've got people running AI underwriter and closing and catching errors that have happened. It's just human element that takes place, correcting those before
Yep.
that contract gets signed, because then you know what it's like, right? Hey, I already signed my loan, and you're like, hey, Steve,
Yeah.
sorry to bug you. We messed up. We need this document. Can you? And you're like, no, I got to move,
Right.
right? I'm
Yeah.
allowed to go buy a new car or go use my credit, so I don't care about the document. So how can you catch those? That's another piece. And then when you really look at back office delivery, what are the steps that literally are data entry, right? MERS registration, FHA, some of these
Yeah.
things where all someone's doing, someone who should be doing more skilled activity, is logging in and keying in data that already exists. So can
Yeah.
we automate that? Yes. The last piece I'll tell you is, once these are all in place, we have clients that forget productivity gains, forget, customer experience, just talk about the ability, if I'm an IMB, to move the loan off my line in a
Oh
very
yeah.
short amount of time, right? So we've got a customer, Mortgage One. Over a year, they were consistently doing a 2-day takeout instead of a 12-day or 14-day or whatever it might be. Those savings are somewhere between 3 and 10 bips per loan, depends on
Yeah.
what you're doing. But they calculated it's over $600,000 for them in additional revenue, not with cost savings, nothing else being calculated.
Right.
So no one that I know was talking about that type of benefit. And again, it was a customer coming to us saying, you guys are missing out. Like, productivity is neat. This
Yeah.
pays for the system all by itself. Forget any of the other benefits you bring to the table. And that was the eye opener for me, because then it's like, oh, well, now I have a conversation with secondary, right? CEOs, other people,
Yeah.
not just ops, around how can I help you?
So we have a few minutes left, and we won't be able to go deep into this, but I'd like, you mentioned implementation for this particular part of the toolkit as what, 90 days ish, something like that?
So there's varying pieces, like post-close automation. You can have that up and running in 3 weeks or less.
Yeah.
When you come to things like disclosure automation, you want to look at 60 to 90 days, because it's a back and forth. So the software doesn't take a long time to implement. It's
Yeah.
more, okay, where is it still missing? Are things still having to go to the disclosure desk? Things like that,
I
to
see.
clean it up and automate it. And it's the same with AI underwriter. We might start and say, here's all the conditions, here's what we could clear, but the underwriter has to have the trust to say, okay, yeah, on all of these, just if it happens this way, just auto clear them.
Yeah.
So you can't do that without having repeated time to go through it. Um,
Makes sense. That
yeah,
makes sense. So it's less about the technical integration. It's more about business rules, just making sure that, you're getting, garbage in, garbage out, right? You got to have the good inputs to get the good outputs. So,
Yeah, absolutely.
well, dude, this was awesome. By the way, you were a rock star in your first podcast. So congratulations.
Oh, I appreciate that, man. I again appreciate the opportunity. The biggest challenge this is going to help us with is getting the name out there, right?
Yeah.
We're not a fit for everybody, but we want to be in the conversation. Like, I hate hearing, "Oh, we just made this decision. I wish we had known what you have." And it's like, oh, that's avoidable, right? We just got to get out there.
Yeah. Well,
Really appreciate it.
that's part of what, I try to do with this podcast is bring awareness to the industry of cool people, cool products, and cool companies. And you hit the mark on all three today. So, dude, thanks for coming on. I appreciate it.
Absolutely.
We'll do another one. We'll have to do it, I guess at midnight one night when you're ready to hit the skins. But looking forward to seeing you out on the circuit as well, Steve.
Dude, same. So much respect. You have like dynamically changed from what you were doing at Flagstar to look at you now, right? Fintech exec that could have just retired, right, on a banking salary, all that. Yeah, but dude, just you got the hustle. I love it, and it's engaging. So keep doing what you're doing.
Thanks, man. All right, everybody. Thanks for tuning in. Come back next Friday for our next episode, and we'll see you then.
Thanks.